Good evening, everyone. Once again, I'm Rakhi Gautam from greytHR, the moderator for the session today. I welcome you all today to our 68th Ask the Expert webinar Parichay. The topic for today is Karnataka Compulsory Gratuity Insurance Rules 2024. Now, I'm sure all of you are very excited to know all about it. But before we dive into the topic, let's do a little housekeeping on how the session goes. So the session, as usual, is divided into two parts. The first part will be the presentation by our speaker, which will then be followed by an audience Q&A. So audience Q&A is where time is all yours, dear attendees. You can, in fact, start putting your questions from now on. And we have a dedicated time slot towards the end, and we'll try to take all questions from you all. Also, the session is currently being recorded. So if you happen to miss out on anything, do not worry at all. We have got you covered. We will share the recording with you once the session is done, along with our speaker's credentials if you want to connect with him. And also, this recording will be available on our greytHR official YouTube channel. So you can always go there and watch it. Now, I think we do have the quorum to start the session. So without any further delay, let me quickly take you all through that. So as you know, the topic for today is Karnataka Insurance Gratuity Rules. And today we will be delving into the key objectives and the timelines for the seamless implementation of the Karnataka Compulsory Gratuity Insurance Rules 2024. Our presentation by the speaker will dissect the critical choice between insurance policies and approved gratuity trusts, which is AGTs, highlighting their respective requirements, advantages, and disadvantages. We'll also be exploring the profound impact of this, which will have on employers. We'll discuss the practical challenges associated with compliance and share all effective strategies to navigate them. As you know, to decode all of that and to share his insights with us, joining us today is CA Amaranath AS, co-founder of Arush India. Mr. Amaranath has around 19 years of rich experience in the field of NRI, HNI taxation, US tax, and labor law consulting. He started his career in the International Executive Services Division of KPMG Global Services, where he worked on US tax returns and related compliance for expatriates. Prior to starting the firm, Amaranath worked in the global employer services practice in Deloitte, Bangalore. His expertise includes various facets of global mobility, like expatriate tax, social security, PF implications on international workers, ESOPs, immigration, assignment structuring, etc. So I can say this for all that we have gotten the perfect person with us today to share his insights on the topic. So once again, I welcome you, Mr. Amaranath, and thank you so much for joining us.
Yeah, thank you, Rakhi. So,
okay, so yes, I would like to now hand over the session to you. You can share your screen and take us through all the insights that we are eagerly waiting for.
Great, thank you. Let me just share my screen.
Sure.
You are able to see my screen now?
Yes, yes.
Okay, great. Okay, thank you. So good evening all. So welcome to this session on Karnataka Compulsory Gratuity Insurance Rules. As the name itself indicates, this is a compulsory gratuity insurance. So there is no option or there is no whether I can go for it or not. So it is compulsory for all the employers who are to whom the gratuity provisions are applicable or where the establishment is covered under the Gratuity Act. So let us see what are the today's topics. It's overview of the Gratuity Act. It's not that I'm elaborating on the entire provisions of the Gratuity Act. This is more like a recap where how the gratuity computation works and the applicability of Gratuity Act, what kind of establishments are covered under Gratuity Act. We'll discuss those things. And the new gratuity rules, which has been notified by Karnataka government, a deep dive into the new gratuity rules and the practical challenges associated with that. Then gratuity trusts. The new rules also talks about the formation of gratuity trusts and also the requirements of such trusts. So we will look into the salient features of the trust and what are the conditions to be fulfilled to form a gratuity trust as per the new rules. And then finally, income tax implications. Income tax implications not from an employee perspective, but it is more from an employer perspective as to when a deduction for gratuity payments would be available as per the Income Tax Act. for corporate tax purposes or a business tax purposes, what you call it as. So we'll look into those provisions also at a high level. Yeah. Moving on to overview of Gratuity Act. So very first thing is many of you may have this question as to why suddenly these rules have been notified in Karnataka. What is the objective behind this, or what's the rationale behind this? This is basically to protect the interests of the employees. So all labor laws in a way are protection to the employee interests, I would say. But what is special in this? Why is this coming right now? I mean, it's not there all along from 1972, and suddenly Karnataka government came up with these rules. So, I mean, rationale or the objective behind this, when you practically look into out of the companies which are filing bankruptcy, several companies do not have cash flows. They are basically bankrupt, and where there are huge provisions sitting in the books of these companies as gratuity payouts to the employees. And as per insolvency and bankruptcy code, employees will take a rank of operational creditors, which is after financial creditors. Financial creditors are basically bankers who have financed to these companies, who have lended loans to these companies. So after then, the employees will come in the rank. When you look at the ranking for payouts at the time of liquidation, employees do not get a better stand compared to the financial creditors. So in order to protect the interests of the employees, these rules have come in where it is mandatory to obtain the insurance or protect the gratuity funds through a trust or through an insurance company, where employees will not be losing out their hard-earned gratuity benefit, even though the companies file bankruptcy or company goes into liquidation. When you create the fund that is specifically dedicated for the employee gratuity payouts, so once the company starts making contribution to these funds, every year they have to continue doing that. So in a way, till the company goes for liquidation, there is a chance that very high corpus sitting in the gratuity fund, and so employee benefits are completely protected. And then comes the applicability of the Gratuity Act. I'm not talking about the applicability of these rules. Basically, as I already mentioned, to whatever establishment the Gratuity Act is applicable, these rules are also applicable. So, what kind of establishments are covered for the purpose of gratuity? So, every factory, mine, oil field, plantation, port, and railway company, then all other establishments where 10 or more employees are employed. So when you look at the factory, there is no minimum number of employees prescribed. So does that mean that even if I have less than 10 employees, do I need to cover under Gratuity Act and payout gratuity? No, actually, when you look at the Act, Gratuity Act, factory also has been defined, and it says that the factory is as defined as per the Factories Act 1948. And when you go to the Factories Act mentions that if the factory is run with the aid of power, then it is 10 employees, minimum 10 employees has to be considered, has to be hired to consider that establishment as a factory. And without the aid of power, it is 20 employees. So if even in the case of a factory, if you have 10 or more employees, indirectly we can say that indirectly gratuity, it comes under the purview of Gratuity Act. So less than 10 employees, even in case of a factory, Gratuity Act may not be applicable. So all other establishments. So what does an establishment mean here? Has there a definition for the term establishment here? Yes, establishments are establishments as defined under the state legislation or the state laws. So basically for an establishment, we look at the Shops and Establishments Act. So if your entity is covered under the Shops and Establishment Act, yes, if you are hiring 10 or more employees, then Gratuity Act is applicable. And then one more question is, if the number of employees falls below 10 at a later point in time, whether can I come out of the Gratuity Act and say that the number of employees have fallen below 10, so I will not cover them? That's not possible. Once the employee strength reaches 10, or once it exceeds 10, then Gratuity Act applies, and it continues to apply even if the number of employees falls below 10. So these are the very salient aspects which you need to keep in mind when you look at the Gratuity Act. So from an employee perspective, when does an employee is eligible to get the gratuity? The law says that there has to be a continuous service of not less than 5 years in case of superannuation, retirement, or in the case of resignation. And that condition of 5 years is not there in the case of death or disablement. So in case of death or disability, you are liable to pay gratuity even if the service period is less than 5 years. Otherwise, if it is superannuation, retirement, or resignation, you can see whether the employee has completed 5 years or not, and then pay out the gratuity. And how does the calculation work? So 15 days salary for every completed year of service, and again 15 days salary, you need to arrive at the salary divided by 26 and multiplied by 15 days. And also service period of more than 6 months would need to be considered as full year. Say for example, an employee has worked for 6 years, 8 months, you have to pay gratuity for 7 years. And if an employee has served only for 6 years, 5 months, it need to be considered as 6 years. So basically the 6 months or more need to be considered, more than 6 months need to be considered as full year. Then definition of wages for the gross salary component may include lot of components like basic, DA, HRA, special allowance, everything. But for the purpose of Gratuity Act, the law covers only the basic and DA. So some companies may have a policy as to whether can I pay gratuity on gross salary, I mean, which is much more beneficial to the employee. His payout will be more than almost double or more than that in some cases. So yeah, they are very much welcome to pay more than what is prescribed here, because gratuity law says that employer can adopt any other the policy for payment towards Gratuity Act can be more beneficial than what is prescribed under the Act. So if you want to pay more gratuity than what is prescribed, you are very much welcome. So, and that's how it goes. And the maximum cap is also there, which is 20 lakhs. So an employer can restrict his payout to 20 lakh rupees. So these are the basics of the Gratuity Act, which I just wanted to touch upon. So there is one polling question.
Okay. So I think this is where my work comes in. So
Yeah,
I'll
yeah.
quickly launch this poll. And we have some 400 plus people here on the webinar with us. So I would urge everybody to participate in this. Okay.
So the question is based on the calculation what we saw now, that is number of completed years of service and then 15 days. The employee is eligible for 30 lakhs of gratuity. Can employer restrict the payout to 20 lakhs, or is it mandatory for him to pay 30 lakhs? Can he restrict the payout to 20 lakhs, whether it is yes, no, or not?
Okay, we are happy to see so many participation. Like I think almost 315 people have already, answered. So the rest of them, please do that. And also I see a lot of questions already coming in. We are great. We are very excited to see your participation. But I also see some of you raising your hands. So again, if you're raising your hand, you have any questions, any feedback, any thought, just write that in the Q&A option which is there, and we'll take that up towards the end. Okay,
Yeah.
so I think we do have the result with us.
Let's see the results.
Okay, let me quickly, I hope all of you have answered. Let me share this.
Oh, okay, good. So 53% have answered yes and 41% no. Okay, yeah, majority goes correct. So yes, he can restrict the payout to 20 lakhs. When you go to the other slide, the first slide, I already explained that the cap is 20 lakhs. However, it does not restrict an employee to pay 20 lakhs. If the employer wants to pay more than 20 lakhs, which is 30 lakhs also, he is very much welcome to pay 30 lakhs, but it is not mandatory for him to pay 30 lakhs, since the act gives the cap of maximum gratuity payout of 20 lakhs only. So yeah, 53% have answered it right. Yeah, you
Great.
can close
Okay.
the.
I'll stop sharing this, and again handing over the session to you to continue.
Yeah, thank you. So let's move on to, yeah. So yeah, compulsory insurance. This is as per the new rules. Now we'll move on to the new rules. So, I mean, where does this flow from? Like, suddenly, how can a state come and say that, I mean, these rules are applicable? Is there a law or does the Gratuity Act talks about this compulsory insurance? Yes. Section 4A of the Gratuity Act talks about compulsory insurance. But it says with effect from such date as may be notified by the appropriate government, obtain a gratuity insurance from Life Insurance Corporation of India or any other approved insurer, or establish the gratuity trust and contribute to the trust periodically to cover the liability for payment towards the gratuity. But when you see here, it starts from with effect from such date as may be notified by the appropriate government. So this is applicable only from the date it is notified by the appropriate government. And now the Karnataka state has notified these rules. So what is appropriate government? So for different establishments, the appropriate government differs and it is being defined under section 2A. So what kind of an establishment your establishment is and to which government is applicable for you is what this definition defines. So in relation to an establishment belonging to or under the control of central government, it is central government is the appropriate government having branches in more than one state. So if your organization or if your company has a branch outside Karnataka, again central government rules are applicable and not the state government. Of a factory belonging to or under the control of the central government, again central government. In case of a port, mine, oil field or a railway company also it is central government. In all other cases it is state government. What is important for the private sector here is point B, having branches in more than one state. So if your organization has a branch in outside Karnataka, then central government rules are applicable and not the state government rules, because your appropriate government is the central government as defined under section 2A. Also section 4A refers to appropriate government, and the central government has not come out with the compulsory insurance rules till date. So these rules are not applicable. It is not mandatory for you to go for the compulsory insurance. But if you have an establishment or your company only in the state of Karnataka, then these rules are applicable. And now the definition says branch. It talks about branch. But what about having a factory outside Karnataka? Whether can that be considered as a branch? So I have a factory in one factory in Karnataka and one factory in Maharashtra. Whether for that particular factory in Karnataka, which rules are applicable, whether state government or central government? See, this is more of an interpretational issue. So because the law talks about only the branch and not a factory, the view is that even if you have factory outside Karnataka, these rules are applicable to the factory which is inside Karnataka, but Maharashtra factory may be excluded, but for Karnataka factory, you may have to take the compulsory insurance. So options available hitherto. I mean, before these rules, just before these rules, what were the options available to the employer with respect to gratuity funding? So obtaining a gratuity insurance from LIC or any other approved insurer, establishing a gratuity trust and contribute to the trust fund, or the third one was make provision for gratuity in the books of account and just continue the provision in my books. And whenever there is a payout happens or whenever there's a requirement to pay the gratuity, I will meet that from my provisioning amount. So I need not form a trust or an insure or obtain insurance from any insurer. Most companies were following third option in Karnataka. So what happens now? I mean, is the third option available going forward? As per the new rules, only the first two options are available. That is, obtain a gratuity insurance from LIC or approved insurer, or establish a gratuity trust and contribute to the trust fund. So what is the implication here? Why do I need to worry about when just it's an insurance, right? Like any other insurance, I would cover the gratuity liability also as an insurance, but that's not the case. Practically what's happening is any insurance company, they won't cover your gratuity liability just because just by insurance. They say that entire the fund need to be transferred to the insurance company so that they will manage the fund as well as they will provide the insurance to you. So there comes the practical challenge. So insurance providers are mandating the formation of a trust except LIC. So LIC is giving the gratuity insurance or the fund management without having a trust, provided your number of employees are less than 500. Even in the case of LIC, if the number of employees are more than 500, they are saying that the trust is mandatory. So, I mean, it is a lot of administrative issues to have the gratuity trust and then maintain separate books of account. The trust has to be audited every year, file income tax returns, and report to registrar of trusts. So there are a lot of implications with respect to the, I mean, administrative compliances which need to be met in case of a trust. And there is no clarity with respect to whether the insurance is only for future gratuity liability or even for the existing provisioning amount. Can I take a view that these rules are have come in now? So this has only a prospective effect, and I'm going to cover only the future liability for my gratuity under insurance and not the existing provision in the books. That interpretation seems to be very aggressive because Section 4A is very clear that the insurance need to be covered for the entire liability of the gratuity liability of the employer and not only the future liabilities. So entire provisioning amount need to be covered by the insurance. Then the premium amount. How do I calculate the premium amount? Is it an actuarial valuation? So I would have anyway taken the actuarial valuation for closing my books of account, whether I can go by that or I need to follow the insurer. Practically, insurer will have his own way of computing the gratuity, which generally differs from the actuarial valuation or the provisioning in the books of account. It will be marginally higher than what is provided in the books of account. So these are the practical challenges which an employer faces as of today. Yeah, so we really need to address these issues, and also the timelines need to be very stringent. Let us look at the new rules in a deeper way. So rules are notified on 10th January 2024. Karnataka becomes the second state to implement these rules after Andhra Pradesh and Telangana. Andhra Pradesh implemented those rules way back in 2011 prior to the partition. So post partition also, both the states are covered by these insurance rules. So it's been 13 years that Andhra Pradesh has notified this, and post that it's only in Karnataka this has become effective. Very stringent timeline of 60 days is prescribed to obtain the insurance in case of existing establishments. So this may pose a lot of cash flow challenges to the organization. So the provision amount in the books may be on the higher side, and to arrange for the cash within 60 days and transfer the amounts to the insurance provider or to the trust may not be or may pose a very big challenge to the organization which need to be dealt with. So for new establishments, 30 days from the date it becomes applicable. It is not from the date of formation. As we already looked into, the Gratuity Act is applicable only when the employee count reaches 10 or exceeds 10. So once the employee count reaches 10, then you have to take the insurance for your gratuity liability, and within 30 days from the date it is applicable, you should comply with these rules. So employer to register the establishment in form number 1 within 30 days from the date of obtaining the insurance. So after obtaining the insurance, you need to file one form called Form 1 with the controlling authority of the state to intimate that you have taken the valid insurance policy and the entire fund is protected now, and to submit the relevant policy details to the controlling authority. Renewals of the policy need to be done periodically before the insurance expiry of the insurance, and the same need to be intimated to the authority within 15 days from such renewal date. So every year also you need to intimate the renewals of this fund to the controlling authority. And before the insurance policy expires, you need to renew the insurance. So other aspects of these rules. An employer who has already established a gratuity fund, you might be saying that many employers, they do have the gratuity fund already because they have taken a very ahead of the rules because of the income tax benefits or whatever reason. So if they have a gratuity fund already, is required to submit the application in Form 2, giving the details of the gratuity trust or the fund which they are contributing to. And such existing approved gratuity fund should cover the entire liability of the employees of the establishment under the provisions of the Act. I see in many cases what happens is companies have formed gratuity trust, but the entire gratuity provision has not been transferred to the trust. They continue to maintain provision in the books, and whenever the cash flow permits, they may transfer the money. But going forward, that's not feasible because the rules are very clear that the existing fund should cover the entire liability of all the employees of the establishment under the provisions of the Act. So the 60 days criteria is applicable even for these trusts. So these companies, so please ensure that within 60 days, the fund is completely transferred to the gratuity trust or the gratuity fund if you are maintaining with any insurer. And 60 days, because the rules are notified on January 10th, then March 10th seems to be the 60-day period. So March 10th is the last date to comply with these regulations. So details of the eligible employees must be resubmitted to the controlling authority whenever there is any change in the details of the insured employees or insurance policy. This may be a tedious task. Every month there could be some resignations or new employees joining in an organization. So there could be a change in the number of employees. Also, there could be the employees who are completing 5 years in a particular month. So how to handle this is the law is not clear here. So generally, the insurance companies do take it on a monthly basis, or if the size of the company is not that big, maybe on a quarterly basis, you may have to submit to the insurance authorities the change in the number of employees and their age and the number of years served in the company to arrive at the gratuity amount. The controlling authority may recover the gratuity amount payable to an employee directly from the insurance company in case of any dispute. This is also a new rule. So since the funds are completely insured or it is going to be handled by a trust, so the controlling authority, which is who is the labor authorities or the labor officer, may recover the gratuity amount directly from the trust or such insurance company in case of any dispute raised by the employee. If he feels that, I mean, the employee is in a hardship or the employer has not given any justification for not payment of gratuity and employee claim is reasonable, then he will directly access the funds in the trust or in the with the insurance company, and he can recover that amount and directly pay to the employee. So some of the conditions for gratuity trust. This is about the employer implications, but now we'll move on to the gratuity trust. So what are the conditions for the gratuity trust? Some of the conditions, very important ones I've highlighted here. Maybe you can just go through the rules to understand it in a detailed way. So employer to maintain the gratuity trust as an irrevocable trust. So what does it mean? This is the basic condition of a gratuity trust, not only from the gratuity point of view, gratuity act point of view, but also from the income tax act point of view to avail the corporate tax deduction. So irrevocable means the employer should not have recourse to the fund. So that means that he cannot have access to the funds when he contributes to the fund. So say for example, the gratuity provision in the books is 1 crore, and now today you will form a trust and transfer the entire 1 crore to the trust. And what happens to that money? Tomorrow, you will again, there is a lot of attrition in the company, and in the next year, you will do the actuarial valuation, and your gratuity payout may come to only 90 lakhs. Can you take back the 10 lakhs from the trust? No, that is called irrevocable trust. The employer cannot have any recourse to the trust funds at any point in time. Even if the liability comes down, the employer cannot recover the money. He should continue the provision, and if there is any change in the thing, so maybe if that comes to 1 crore 10 lakhs, only the the incremental amount he has to contribute, so that the deficiency, if there is a short, I mean, if the gratuity liability amount falls down, the employer cannot take back the money from the trust or from the insurance provider. So trust should have 5 trustees, but not equal number of representatives of employer and employees. And gratuity trust should be registered under the Indian Trusts Act 1882 or any other applicable law, and also be complied with the provisions of the Income Tax Act 1961. So what does this mean? Like comply with the provisions of the Income Tax Act means that you must obtain the approval from the Principal Commissioner of Income Tax once the trust is formed, so that you will get an income tax deduction. One is that whether you get an income tax deduction or not, that's a different thing. Even the rules are very clear that you must obtain the approval of the income tax authorities. The gratuity trust shall adhere to the Indian Accounting Standards 15 and any law applicable to the trust. So Accounting Standard 15 talks about employee benefits. This is more from a bookkeeping perspective. So for actually, the one of the important aspects of the Indian Accounting Standard 15 is the actuarial valuation. So indirectly, it is saying that the trust should get its liability. Trust also should get the actuarial valuation done and then recover the amount from the employer. So where employer has obtained a group gratuity scheme from an insurance company, the same should be approved under the fourth schedule of the Income Tax Act. So if there is no trust formed and if you have obtained the insurance directly from the insurance company, even that insurance scheme need to be approved by the income tax under Part C of the fourth schedule is what it says. So then comes the second polling question.
Okay,
So
we launched the poll.
yeah. So this question is about the trust rules. So is it mandatory to have a gratuity trust if the number of employees are more than 500? Because many places the rules talk about 500 employees threshold. If it is more than 500 employees, if it is having a gratuity trust already, so these are the conditions to be fulfilled. So what is the understanding? What is the correct understanding? As per the rules, is it mandatory to have a gratuity trust if the number of employees are more than 500 in a company or in an organization? So you must have seen that there are a lot of gray areas and there are a lot of practical challenges with these insurance compulsory insurance rules. So, but anyway, the law is law and the rules are rules. It's a law of the land. So everyone must adhere to this and see how they can handle these practical issues.
Okay, more than 300 people have already ticked mark their choice. The rest of you would request you to do that, and then we'll take it from there. Also, I see a lot of questions coming your way, Mr. Amaranath.
Okay, yeah, that's expected actually because practically the things are not that clear to the industry as well, and also the rules are also leaves a lot of interpretations and gray areas. So
I'm certain you will be able to, help us with all the insights. We'll just
yeah,
have to have like a rapid round of, questions because a lot to cover.
yeah.
Okay, so I am going to end the poll now. I think we have the response with us, and let me share the results. Okay.
Yes, 77%, no, 19%. Okay, 19% who have answered no have correctly answered the poll. So even if in the case of in a company or an organization where there are more than 500 employees, either the rules or the act does not say that having a trust is mandatory. So, however, when you look at the practical challenges, as I explained, no insurance company is giving you the insurance without having the trust. I mean, except LIC, and even LIC, it should be more than 500. So, as per the law, it is not mandatory, but practically speaking, to obtain the insurance, you may have to register the trust. So now comes the interesting slide as to implications of non-compliance. So what happens if I do not comply with this? And when you look at penalties, it can go up maximum 20,000 rupees only. So I just pay the penalty of 20,000, but I do not contribute to the fund of the trust. I'll continue doing provisioning in the books. But that is not intention. When you look at the third thing is the prosecution, where prosecution is nothing but an imprisonment, where the management of the company can be imprisoned for a term of up to 2 years under the Gratuity Act. Though financial penalties seem to be very minimal, which has not been amended from long time, but there is a risk of prosecution and imprisonment. So the companies have to be very conscious about this and start complying with these new rules. Yeah, then comes the income tax implications. I think because the queries are more, let's focus more time on the queries. I would definitely touch upon the income tax implications as well, but may not be in detail. So deduction towards contribution. Now, you may have a query as to this is more from a finance professional perspective, or may not be from a payroll or a HR perspective. So I just really want to touch upon to give a high level view as to how it practically working. So as per the Income Tax Act, these are the various sections I have given and also the contents of these section. In sum and substance, it is very clear that by reading through these definitions, the deduction for the contributions made to an approved gratuity fund is available for deduction only in case you have a trust or if you have obtained an insurance policy with LIC or any other approved insurer, that too on payment basis only. So when you actually make the contribution to the fund or the trust, then the deduction is available. Otherwise, the deduction is not available. So only continuing the provision in the books, the deduction is not available. However, only for the payouts which you have made during the year, those the companies were taking deduction on an actual payment basis, which is very much allowed as per the law. So direct contribution to insurer without establishing the gratuity trust. As I mentioned, of course, LIC is giving a policy which is even if you do not have the trust, provided the number of employees are less than 500. So is it, if I make contribution to that fund, whether am I eligible for deduction as per the Income Tax Act? Because Income Tax Act is more talks about the trust, but not the approved contribution to approved gratuity fund. So, I mean, if I do not have the trust, what happens? I mean, it should not happen that I will also contribute without having any tax benefit, though should not become a double whammy. So, what happens to this? For to address this question, we have a judicial precedence, and this ruling is from Supreme Court. In CIT versus Textool Company Limited, what happened? The company had an approved had a gratuity trust. However, the obtaining the approval from the PCIT took some time, a year or so. And during that period, company started making contributions to the fund. And the income tax authority said that the trust was not approved when you made the contribution. So we do not allow the deduction for such contributions. However, the Supreme Court observed that the trust is an irrevocable trust, and the employer did not have any recourse to these funds. And the moment the contributions were made to the trust, the employer did not have any access to the funds, and hence it need to be allowed as a deduction. So drawing lines from the same principle, a view which is emerging is that, so even if you do not have a trust and if you have an approved gratuity fund, without having the trust, if you are making contributions to the fund, it should be allowed as a deduction, provided employer does not have any recourse to these funds. And this decision has been followed by several ITACs also, like Income Tax Appellate Tribunal also, which are lower courts. So this seems to be a good decision to look at in case the companies are not planning to have the gratuity trust. Yeah, I think now it is time to take up questions.
So first of all, thank you so much, Mr. Amaranath, for that, insightful, detailed presentation. I'm sure this is going to act as a personal guide for all of us, here to learn about Karnataka gratuity insurance rules. So let me quickly dive into the questions. I think we have a lot to cover. We'll try to cover as much as we can. So let's start with that. The first question is it mandatory for employer having more than 500 employees to form a trust?
Yeah, so we have already addressed this. This is the polling question as well. So it is not mandatory as per the act or the rules. However, looking at the practical scenario where insurance companies are not insuring the people without having the trust. So practically, you may be forced to have the trust if you are having more than 500 employees. But you can check with the insurers if they are agreeing to your insurance providers, whether they are able to cover the gratuity insurance without having the trust.
Okay. Moving on to the next question from Yoga Raja. What is the minimum headcount required for taking insurance?
Yeah, this also has been addressed. There is no minimum headcount required for taking insurance. If the Gratuity Act is applicable to your organization, even the insurance becomes mandatory.
Next question from Mahesh. Is the gratuity coverage for current and future service or only future service in case of death of an employee?
Yeah, this also I addressed in my presentation. So yeah, one view is that because the rules have come in now, so it covers only the future liability and not the past liability. But as I said, that interpretation seems to be an aggressive view, considering the objective of the rules and also Section 4A of the Gratuity Act. So it should cover past liability as well, in my view.
Okay. Next question is from Gopal. Please recommend insurance companies having expertise in such coverage.
Like many companies are giving this. I mean, LIC is one, of course, and also like HDFC is also there. Kotak is there. These are the few companies which I am aware of. Yeah.
Next question is from Kamlesh. What is the minimum employee headcount? I think a lot of questions are already covered and discussed, but we'll just take that quickly, try to finish. So this is what is the minimum employee headcount for setting up gratuity trust?
Yeah, there is no minimum number of employees for the trust. So if the Gratuity Act is applicable, then you should go for the trust or you should fund the insurance liability. And as far as I am aware, LIC is giving the fund thing if it is less than 500 employees also.
Okay. Next question is from Rakshit. Gratuity premium details for the establishment which is not registered under gratuity trust.
Gratuity premium details. Gratuity premium details, basically, as I said, it goes with the actuarial valuation, and the insurance company's liability will be slightly more than the actuarial valuation. So maybe you can contact your insurer to understand the liability in a better way.
Next question is from Mahesh. Is it necessary to park the corpus with insurance company, or the company can keep it with themselves? We are a startup, still not profitable, so tax rebate does not apply to us.
Yeah. So yeah, based on the rules, it is mandatory to park the corpus with an insurance company, or if you form a trust, you can park the funds with the trust as well. But if you are parking with the trust, then trust has to manage the funds as prescribed under Rule 67 of the Income Tax Act. So the entire onus to manage the funds will be on the trustees and the trust itself. However, it is left to you. I mean, the company cannot continue the provision in the books as per these rules. It either trust is mandatory or obtain an insurance from the insurance company.
Okay. Next question is from Kamlesh. A registered office is in Bangalore, branch office is in Mumbai. Is this new rule applicable?
It should not be, because the branch is outside Karnataka. So the central rules are applicable and not the state rules in your case. So central government has not come up with any mandatory compulsory insurance rules for the gratuity as of now. So I would think that this is not applicable to.
Next question is, I have a company that had 15 employees before the notification came out, but since January, I only have 7. Am I still required to get gratuity insurance? Also, I was not able to find any company that provided such insurance.
So also, when I discussed about the applicability of the Gratuity Act, as we discussed, even if the number of employees falls below 10, once it is applicable, it continues to apply. So these Gratuity Act is applicable to you. So consequently, the rules are also applicable to you. You are covered under the compulsory insurance rules. Also, I was not able to find any company that provides such insurance. Yeah, as I said, there is no product available in the industry only as an insurance premium. You have to transfer entire provision to the insurance company. So they take up both management of the funds as well as they provide the insurance. Or the alternative is to set up a trust and transfer the funds to the trust.
Okay. Next question we have from Yogarajan. Controlling authority is referred in the notification. Who is this controlling authority?
So the controlling authority for gratuity purposes at this point in time is the labor officer, the jurisdictional labor office, and the concerned labor officer is the controlling authority.
Okay. I think the rest of the 2 questions, because we have a lot of questions here, are already answered.
Yeah.
So we'll not take that. Moving on to the next question from Madhu. Technically, the gratuity is eligible for years. Okay, so I think this is more like a feedback.
Where employees are working 5 days in a week. That's correct. So if the number of days working is less than 6 days, then it is 4 years and 190 days. And if it is 6 days, then it is 4 years and 240 days. So in a way, if it is 5-day working, you have to pay the gratuity if the employee has worked for 4 years and 190 days, which is 6 months approximately, 6 months and a little more than 6 months. Yeah, that's correct.
Okay. Moving on to the next question. Again, some of those are already answered. So we answered, we'll not take that. Next question is from Kamal. If the employee has worked for 2 years and employee dies, what period of gratuity is to be paid? 2 years or 5 years?
No, it is for 2 years only, not 5 years. Yeah.
Gratuity for someone, I think this is also answered. I'm looking for questions that we haven't covered. Okay, our organization has only 30 employees. Is it all right to only purchase the gratuity liability policy and not form a trust?
Yeah, as I mentioned, like there's no mandate to form the trust. If your insurer is giving the insurance policy which covers the gratuity liability, then you could continue the same. There's no mandate to form a trust.
Okay. Next question is from Mark. I think this is more from an employee perspective. Is the 20 lakh tax free in the hands of the employee, or how is
Yes,
it?
up to 20 lakhs, it is tax-free. If the company is paying more than 20 lakhs, as I discussed, which are beneficial provisions, the excess of 20 lakhs would be taxable in the hands of the employee. One more point to note here is the 20 lakhs is the lifetime exemption. It is not with one employer. So if the employee has joined your organization from some other company, it is better you take a declaration from him that whether he has already claimed to the extent he could have claimed around 5 lakhs or 10 lakhs, whatever amount he has received from his previous employment. So take a declaration to that effect and then decide what is the tax exemption in the case of the employee.
Okay. I think there are a lot of questions on if employee has been in the company for say 4 years, 7 months, 4 years, 5 months. So, you can address that once. I think you did share that.
Yeah.
Yeah.
So see, as I already discussed, the eligibility for gratuity comes in. There are two categories of employees, generally speaking. One is the 6-day working or maybe 7-day working, whatever you call it as, and less than 6 days working. So in case of an organization or an employer where there is a 6-day working, the employer is liable to pay gratuity or the continuous service criteria will be met by the employee provided he works there for 4 years and 240 days in the year. When I say 4 years and 240 days, this is not only working days. Even the holidays and the weekends need to be considered in this 240 days. So in this question, example, the question which Sriram has posted, assuming the work days are 6 days a week, then 4 years and 240 days, if the employee is completing, then he will be eligible for gratuity. And the next category is less than 6 days. If your organization has a policy of working less than 6 days a week, then it is 4 years and 190 days. If an employee is completing 4 years and 190 days, immediately he will be eligible for gratuity. Yeah.
Okay. I hope that answers the question for everybody who had the same question. Moving on to the next from Ludimir. For a 4-year-old company, is it compulsory to get the insurance, or does the age of the company affect the compliance as well?
Yeah, and see, this is a good question. So the question is like the company itself is 4 years and the employees are not eligible until they complete 5 years. So there is no question of payout for me. So is it mandatory to cover the liability with the insurance? See, unfortunately, yes, the rule does not give any exemption if it is a startup or where the company is not completed 5 years. See, as we already see, there could be some death cases where they are eligible for gratuity payout, even if it is less than 5 years. So keeping all those things in mind, there is no exemption, even if it is less than 5 years. So you have to mandatorily go for the insurance.
Okay. Next question is from Aruna. Is it necessary to tie up with an insurer, or company can pay from own funds?
Yeah, company cannot pay from own funds. I mean, hitherto that is what the companies were doing, where the provision used to be continued in the books and company used to pay out from its own funds whenever the liability arises. So that's no more an option. It's only with the insurance provider or forming a trust, and the trust can pay out at the time of settlement.
Okay. Again, looking for, there are some similar questions, so we are skipping that. Moving on. Okay, there's one question from Tanuj. How is the applicability of on employer is arrived? Sole presence in Karnataka is required for these rules to be applied, or is it could be different?
Who has posted this? Tanuj.
Tanuj Jain. It's how is the applicability on employer is arrived? Is the sole presence in
Tanuj Jain.
Karnataka
How is
required?
the applicability on employer is arrived? Sole presence in Karnataka is required for this rule to be applied. Okay. When does it apply to the employer is what he's asking. So, yeah, if the employer has 10 or more employees where the gratuity is applicable to that organization, then this is all these rules are also applicable. However, the exception is if they have branch outside Karnataka, barring Tamil Nadu, barring Andhra Pradesh and Telangana, then these rules will not be applicable. Sole presence in Karnataka, yes, these rules are applicable. Yes.
Okay. Also, all of you, those who are raising your hands, you can put your questions, any thought, feedback in the Q&A option. Moving on to the next question from Kamal. My company registered office is in Karnataka, but employees are spread across India. Can we pay only insurance for Karnataka employees?
No, as long as they are employees of your organization, they are covered under the gratuity liability. Just because their presence is outside Karnataka, then that cannot be exempted from the insurance perspective. Because whether they are in Karnataka or outside Karnataka, your liability for the gratuity remains same. So it should be covered.
Okay. Also, again, a lot of questions are if, my corporate office or my registered office is in Bangalore, but we also have branches in Mumbai or Chennai. So if you can, give us one answer to all that questions as well.
Yeah. So again, coming to the appropriate government definition, which we discussed in the slides also, the one of the exception is having branch in more than one state. If you have branch in more than one state, then the appropriate government which is applicable for that organization is the central government, not the state government. So central government as of now has not prescribed any rules or they have not mandated compulsory insurance for the payout of gratuity. So if you have a branch outside Karnataka, then barring if the branch is in Telangana or Andhra Pradesh, again the gratuity may be applicable. Maybe it's an interpretation. But say suppose if you have a branch in Delhi or Mumbai or Chennai, none of these states have notified these rules, and central government also has notified these rules. Hence, these rules are not applicable to you.
Okay. Now moving on to the next question from Jaren K. Sam. They have like some 6 questions there. I'll just read out. So is there any particular scheme that the government wants employer to choose?
No, government has not prescribed any scheme. It's an insurance scheme which is provided by the LIC or any other approved insurer or a gratuity trust.
Yes. So they have this question, who are the other approved insurer?
Approved insurer are basically IRDA approved insurer. So as I said, but not all IRDA approved insurance companies are giving you this this benefit. So they do not have the products which covers gratuity insurance. So as far as I know, HDFC, then Kotak, LIC, these are the 3 insurers which I am aware of.
Okay. The next question is, what is the calculation for the premium of the insurance?
It goes with the actuarial valuation. More or less, it matches the actuarial valuation. Of course, insurance service provider will have his own actuaries inside the house. So they will tell you the premium amount, which may be slightly higher than the actuarial valuation, which you would have done for at the time of finalizing your books of account.
Okay. Is there any extension on the deadline?
See, as of now, no extension has been prescribed. However, there are representations made and they're being made. So we just need to wait and watch.
Okay. Next is, what are all the filing work after getting the insurance? If you can
Yeah,
share.
as I said, Form 1 need to be filed in the case of a new, if you are taking the insurance for the first time. If it is an existing company having the trust, then it is Form 2. And Form 1, along with all the employee names and their date of birth, their age, their last run salary or existing salary, and the number of years of service, all these details need to be given to the controlling authority.
Okay. Is the filing to be done online or offline?
Offline it is. No online mechanism has been prescribed, at least at this point in time. So we presume that it is offline.
Okay. Again, some same questions are there. So we are skipping that. We've already answered. Also, a lot of questions are if we can share the PPT, they're, very happy with the presentation that you have given. A lot of people have shared comments like very insightful, beautiful, in fact. But what we'll do will, as I said, we will share the recording with you, which will have all the PPT and everything, all the information. So you can just watch the recording and get it from there. Also, we'll share the credentials of Mr. Amaranath with you. If you want to directly get in touch with him, you can do that. Okay, moving on to the next question, which is from Rajaguru, what is the penalty if the insurance is not taken for the entire liability and taken only for the future liability?
Yeah, as I already discussed, the penalty, financial penalty is only 20,000. It can go up to 20,000. However, you should also keep in mind the prosecution which has been prescribed, which is nothing but imprisonment. So we do not know how seriously this will be viewed. And generally, like if there is a non-compliance and if the employee's payout does not happen due to cash crunch or whatever reason, then the management may be prosecuted as well.
Okay. Next question is from Vibha. Kindly confirm if this is applicable only for factory or even private limited companies. That is, they are in recruitment company.
Yeah, it applies to all establishments, not only to factories. If you are having 10 or more employees, then this is applicable, whether it's a private limited company or a partnership firm or an individual proprietorship concern. If you have 10 or more employees, you are covered under the Gratuity Act, and these rules are applicable.
Okay. Moving on to the next question. I think this is something from Arun, whether company can have both insurance and trust account or not.
It can have, that's what I said. See, if you do not have the insurance provider, the fund management has to be done by the trust only. So many people, many trusts do not want to take that on their head because the investments are also not like very straightforward. It is prescribed under Rule 67 of the income tax rules. So compulsorily that investment pattern has to be followed, and it needs to be watched closely as to whether the fund is gaining or it is making losses or whatever, those kind of things. So the companies really do not want to take that administrative burden. So they give the entire fund to an insurance provider who manages the fund for the trust as well.
Okay. Next question is from Crystal. Organizations have gratuity set in CTC and deductions are done on a monthly basis. Is this correct? How is it done?
I will not say that this is a deduction. This is more of a presentation to one is the gross salary payout to the employee, and then the line item, the last line items is the total cost to the company from hiring one particular employee. So I mean, it is more like a presentation. I would say that what is the cost incurred by the company in case they hire you is what they are giving. So it is not, you cannot read that as a deduction from your payout. I would say that your gross salary is what you are entitled to. On top of that, the employer has these obligations to meet, and so the total cost to the company becomes this much. That's the way it need to be looked at.
Next question is, does an NGO registered under Section 12A already still create a gratuity trust since already the income is exempted? So does an NGO registered under Section 12A still create a gratuity trust since the income is already exempted?
Hello?
Yes, hello. Can you hear me?
Yeah, I can hear you. Okay.
Okay.
So
Yes, so the question is, does an NGO registered under Section 12A still
already.
have to create a gratuity trust since it's already, the income is
See, it
already
is not, yeah, it's not the question whether the organization's income is exempt or not. That's not the question here. So, what are the measures taken by the employee to protect the interests of an employee with respect to his gratuity payouts, gratuity benefit? So, whether it has got valet registration or not, if Gratuity Act is applicable to your organization, then these rules are also applicable.
Okay. Again, I'm seeing some of the questions which are already answered. So we'll not take that. Moving on to some new questions. Okay, one question is from Venkataraman. The question is there a way that an employer can estimate how much will it cost for a gratuity insurance liability? What is the driver for the insurance gratuity calculation?
Yeah, I mean, if you go to an actuary, yes, actuary will calculate that and he will give you a report quantifying your liability. What is the driver for the insurance gratuity calculation is basically like the number of employees and their age and their salary. and the number of years of service. Based on these parameters, you have to arrive at the gratuity payout, the liability calculation.
Okay. Next question is from Sunita. Can the entire gratuity provision be allowed under income tax under Section 43B if insurance has been obtained against the same?
Yes, if you have obtained the insurance and you have made the contribution, entire provision to the insurance fund, then the deduction can be claimed.
Okay. Next question is again some same questions. Okay, one question is from Rakshit. Is it possible to obtain the insurance premium without setting up a gratuity trust?
Yeah, I already answered this as well. So if you do not want to have the trust and if the number of employees are less than 500, then you can take the gratuity insurance from LIC.
Okay. I think the rest of the questions are already covered. I see a lot of questions about the branches so that, we have here, but the offices are there also. So, okay, looking for new questions. I don't see any. Or the question is more like if our company is 30 months old or it's not completed, 5 years right now. What is
That
there?
also we addressed anyway.
Yes, we did.
Income generated. One question, will income generated by funds be taxed if no approved trust? Yeah. See, if you are not obtaining the income tax approval for the trust, it is anyway violation of the new rules as well. Because new rules are also very clear that the trust has to be registered under the Indian Trusts Act, as well as you should have obtained an approval from the income tax authorities. So once you obtain the approval, then the income is exempt in the hands of the trust. Otherwise, it is going to be taxable. So in a way, it is like you are not compliant as well as the income is also taxable. So you can seriously look into it and obtain the approval if you have not one already.
Okay. Then a lot of branches questions.
Yeah. If gratuity insurance taken for previous liability, whether IT deduction will allow in this year? Yes, in the year of making the contribution, definitely you will get the deduction, even if it is for the previous liability.
Okay, there's one question from Nidhin. To be precise, if I have 10 employees and our total gratuity amount is 1 lakh per month and per annum it's 12 lakh, how much should I keep in fund?
See, there is no question of how. I am not sure how he arrived at 1 lakh per month, because generally it is an yearly exercise, and the gratuity liability, at the end of the year, you take the actuarial valuation and whatever the actuary prescribes, that's what the provision you make. And going forward, you check with the insurance company as well. And if the insurance company says it is 12 lakhs is your liability, then you have to contribute 12 lakhs to your gratuity fund.
Okay. There's one question from Kshitij. Private insurer is also giving policy without forming trust based on the case law. Can we claim tax deduction on past service gratuity, which will be funded at the time of transfer to insurer, or do we need to wait for the amount to be paid to employees?
No, as long as you are transferring the fund to the insurer, you can claim the deduction. Of course, even that is based on the Supreme Court decision. So it should be a conscious call which the company needs to take, because there is no trust is formed. You have to decide whether, based on the Supreme Court decision, whether you want to take a position that your contribution is eligible for deduction. Based on the decision, yes, if you are ready to take that position, yes, the entire liability, even for the past liability, once you contribute to the insurance fund, it should be allowed as a deduction, provided the employer do not have a recourse to the fund. Generally, he will not have. So the deduction should be available.
Okay. There's a question from Praveen. Since it is an irrevocable fund, what in case maximum employees leave company before completing the gratuity eligibility criteria? Is that amount paid is adjustable to next eligible employees?
Yeah, next eligible employees, it is adjustable, but that does not mean that the employer can withdraw the funds from the insurer or from the trust. The funds have to be left there, and in the subsequent year, say if there is a lot of attrition, so your subsequent payout or the actuarial valuation will be adjusted to that extent. So you will retain the funds there only.
Okay. Let me look for new questions. I think all these questions mostly are covered. So let me look at the latest questions that we have received.
Yeah, maybe latest questions will be
Yeah.
yeah, because something like top insurance company.
So there's a question from Ravi Kumar. Is the addition and deletion on prorate base or what? No proper clarity. Prorate base or what? Is the addition and deletion on prorate base?
No, not able to understand the question. Can you repeat the
This
question?
is the question is the addition and deletion on prorate base or what? No proper clarity. Can we have more context to this question, I think? Ravi, if you can add more to it.
Maybe in the meantime, we'll see any other question. If an employee left between the year, insurance company will they return the amount to employer? I mean, in between the year means what? I mean, before completing the 5 years, if he is leaving, then he is not eligible for gratuity, but insurance company will not return the amount to the employer. It will be in the fund itself. So, I mean, if an employee has completed 5 years, then he will be eligible for gratuity and the insurance company will directly settle the amount to the employee. Or if you have a trust, they will pay the benefit to the trust first and the trust has to settle to the employee.
Okay, there's one question from Manoj. Where can we know the approval status from the IT department?
Approval status, you will get to know there will be a separate order passed by the Principal Commissioner of Income Tax approving your gratuity trust. So they will issue that order to the employer. So from that date onwards, it is approved from the income tax authorities.
Okay, there's one question from Subhashini. Is the IT approval required if we are not forming trust but managing through the LIC or insurance company?
Only if you have the approval from the income tax authorities, you can claim the income tax deduction. Or if you are claiming the LIC thing, if you are availing the LIC would have already taken the approval from the income tax authorities. So you just need to submit a letter to the income tax office that you are taking the policy from the LIC, which has already been approved, and you can take the deduction accordingly.
Okay. There's one question from Maruti. What is last drawn salary under gratuity? Is it full salary which is fixed in offer letter or actual working day salary? While calculating gratuity, which one we should be considering?
Last drawn salary means monthly salary. Of course, the definition of salary is basic and DA. It is not that if he has availed any leaves during that time or if there is any deduction for loss of pay and all these things, that cannot be considered as a last drawn salary. It's a normal salary which you would have entitled to if you had worked all the days, is what the last salary means, last drawn salary.
There's one question from Basava Raju. Is it mandatory to hold funds in the trust even after obtaining the insurance?
No. See, there are two aspects. One is the trust and the insurance. Like either of these two you can choose. Or if you want to form the trust and then again give the funds to the insurance company to manage, even you can do that as well.
Okay, I think let's just take one last question. This is one question that we have. It might be already answered, but do we have to pay full amount of liabilities or only the premium amount of that liabilities to the insurance company?
Yeah, see, the everyone is getting confused with this because the rules talk about insurance, and as I already clarified, it is not like an insurance premium which you pay and you will cover the liability. No insurance company is giving you that kind of a policy where you can just take the insurance on your gratuity. So practically speaking, though the rules does not say that you have to transfer entire your gratuity liability to the insurance company, practically without transferring that amount, it will not work. So you will end up transferring the entire provision amount to the insurance company to manage your fund for the payout.
Okay, just one last question we'll take from Aparna. For LIC Group Gratuity Insurance Agent said, payout will be to company account and not employee. Is this valid or is this correct?
No, that is valid because the rules does not say that it has to be settled directly by the insurer. But what I understand is like LIC, I thought like they will settle the payout directly with the employee. However, if they are saying that it comes to the company and company has to in turn settle it, also that should be fine. But it is advisable to have it settled directly from LIC rather than accepting the funds by the employee.
Okay. I'll keep saying one last question, but I'll just take a couple. I think this is the same question from both Sunita and Rajaguru. The question is, what if the business is getting closed and after making all the payments to the employees, there is still amount in the fund, whether the insurance company will return the amount to the company or not?
Yeah. So the company is getting into liquidation and entire liability is settled to the employees, but still there are excess funds available. Yes, at that point in time, employer can take back that money and utilize for other payments. So only at the time of liquidation, employer will have recourse to the fund only if after settling the liability of the employees.
Okay. I think that's all. We have covered most of the questions. A lot of questions were on the branches. But if there is still any other question pending or, you need more clarity, as I promised before, we will share the recording also of this webinar with you along with Mr. Amaranath's details. You can connect with him directly. He's also there on LinkedIn. You can connect, ask questions. I think he'll be, very happy to answer. And yes, that's about it from today's session. Thank you so much once again, Mr. Amaranath, for your time, for answering all
Thank
these
you.
questions.
Thank you,
And
Raki, for giving me an opportunity to share my views on the compulsory gratuity insurance. Thank you.
great. Pleasure is all ours. And I would quickly share a PPT. Can we please have that on screen? Okay. So as a lot of you are already aware, we also have a Grey Tribe community where we have experts like Mr. Amarnath there to help you with your queries. So please feel free to sign up. We'll also share the link of this Grey Tribe community with you, where you can sign up, ask questions, be part of these insightful discussions, and we'll also be sharing the recording with you. If apart from this you have any other questions, you can connect with me at rakigautam@greytip.com and we will get back to you. Once again, thank you so much for joining, for making this session a huge success. I think the participation was great, and there are a lot of great feedback that we are receiving from the audience right now. Mr. Amarnath,
Thank
for
you.
this
Thank you.
wonderful.
Thank you all for your participation and your feedback. Much obliged. Thank you.
Thank you so much, everybody. Until next time, we'll be back again with a more interesting topic. Thank you so much.
Thank you.